So previously I was talking about one of the best times you could possibly trade, so check that out. Today it's all about order blocks. What are they, what do they look like, and most importantly, how can you use them? Well, order blocks are just another one of ICT's concepts. These areas are often very reactionary to price, and as a result we can base our trades off them. Talking about entry points and exit points, which are commonly referred to as profit targets or take profit levels. Quickly, I just launched a free Discord. Check it out, link in the description. Free order blocks. What do they look like? Let's take a look at this example. So now I've got an example of what this bearish order block or any order block actually looks like, the kind of things we're looking for, so let's get into that. So first, all we're going to be looking for is a liquidity run or a liquidity sweep, some sort of liquidity to be taken, whether that's buy side or sell side. So as you can see from this diagram, we have equal highs. It could be a single high, equal highs, 3 equal highs. You get the point. We have a liquidity resting above here. We have these highs, goes up, takes out the liquidity. Then we're looking for a break in market structure, or we're looking for a pattern, which I'll show you. In a bearish scenario, this is what we're going to be looking for. We have this high, we have the liquidity resting above it, as you saw in the previous diagram. Then we push down a bit, and then we go up. So this is the liquidity run, right? This is that time where the liquidity gets swept. Then all we're going to be doing is waiting for this low to get targeted. So as you can see, this is the low. Next candle, if it's bearish like this, and it takes out, the moment it takes out the last bullish candle after the liquidity sweep, that is when the order block forms. But now where do we draw the order block from, you may ask? We draw it from the open of the bullish candle. So in the other way around, which I'll show you after, it's the close. So in this one, it's the open. So the last bullish candle, we swept this high and we came down. So now we're going to be looking at the last bullish candle, the low of it to be taken. The moment it's taken, our order block comes out, and that's drawn at the open of this. So you can forget this now. This is the order block. All we're going to be doing is waiting for price to come up, a very reactionary point, as I said, and expecting it to go down. Now if we reverse it and look at it in a bullish scenario, all we're going to be doing is the same thing essentially. We have a down candle, an up candle, there's liquidity below this down candle. We wait for it to get taken out, as it does there. Then we're looking for the last bearish candle to get violated, which sounds a bit aggressive, but basically to get taken out. So as you can see, we have a down candle, up candle, down candle. So we've already taken the liquidity. Now all we're waiting is for a down candle high to get taken out, which it does right here. Down candle, and the moment this high gets taken out with this green candle, that is when the order block forms. And as you can see, it's going to be right there, this line, that is the order block. Oops. Extend that out. We'll be waiting for price to do something like this and to go up. All of these areas are very reactionary. Order blocks, fair value gaps, breaker blocks. I've done videos on all of them, check them out. Very reactionary points. That's why you can base trades off them, base daily bias off them, all those kind of things. If you're enjoying this video so far, make sure to hit the like button so this video can reach more traders just like you. Thanks a lot, guys. Finally, how can you use them? That's the main thing you guys want to know, right? Well, you can use them as a point of entry. I previously discussed how you can use fair value gaps as a point of entry, so this is just another way of entering. Just a note though, don't add too many forms of entry because it can get a bit complicated, and that's the furthest thing we want to do from trading. So now let's wrap it up by showing some examples of entry points using order blocks. Let's take a look at this. We have a high clearly. I can draw my liquidity above there. That's the liquidity as we saw in the diagram before. We have a high, we come down, push down, sweep the liquidity. So now we've swept the liquidity. So now all we're looking for is the last bullish candle to get violated. And you stop saying that word. As you can see, we can draw maybe a horizontal ray right there. So this is the last bullish candle, or you could actually look at the last series of bullish candles. But since the diagram said last bullish, I'll go for the last bullish one. The low of that, which is right there, the moment it gets taken out. So this one, let's use a replay tool there. So the moment this comes down and takes out the low, the order block is formed. So then our order block is actually going to be the same line because there's barely any wick in this. The low and the open, yeah, it's exactly the same. So there's no wick. But let's say if this was a low, then the order block would actually be there, the open of it. This is going to be the order block in this example. We could actually just draw this rectangle like that. Something like this. And then we expect this area, this box, to be respected by price. So when it comes into this, it reacts very aggressively and goes down, which it does end up doing. As you can see, it taps it and goes down. Another example of a bearish order block. So all we're doing is waiting for that liquidity to be swept first, which it does there. As you can see, there was this high, relatively equal, gets swept, goes up. Then what we're looking for, the last bullish candle before that sweep, right there. This becomes the order block there. So the moment the low of this candle, let me zoom in. The moment the low of the candle gets taken out, which is right there, that's the low of the last bullish. The moment it gets taken out, then we have our order block, which starts from there and all the way up to the top. So if I get the rectangle tool out again, this would be the order block right there. And as you can see, price comes into it, respects it, and then pushes down. So easily tradable, very reactionary, as I said, and that's all that it is really. Further improve your trading, check out these two videos right here. That's all that needs to be said from my side. Happy trading, stay safe, see you next week.